What just happened with HIMS and HERS stock? After a monster run from 30 to over 66 in just a few weeks, HIMS is finally starting to show signs of exhaustion. But the big question is this just a quick dip before the next move higher, or the start of a much deeper correction? In this video, we're going to break down the technicals, momentum signals, key trading levels, and exactly how we're planning to approach this trade in the coming days. HIMS has been on an absolute tear, but today's price action was different. The stock dropped nearly 6%, closing at 57.55 on heavy volume, over 49 million shares traded. That's not just a pullback, that's distribution. And it happened right after tagging the 100% Fibonacci extension at 66.64, which also lines up almost perfectly with the upper resistance zone from earlier this year. In other words, this wasn't random. That 66 to 67 zone has history. From there, price rolled over sharply, slicing back below 59.20, which was the high-volume support shelf and the breakdown line from the prior consolidation. That break opens the door for a retrace toward lower FIB levels and major moving average support. The shift in momentum is showing up across the board. The price momentum oscillator just crossed down for the first time during this run, signaling that the trend is softening. The rate of change, which had spiked as high as 64% during the surge, is now curling lower. Another sign that buyers are backing off. MACD remains elevated but is starting to flatten out, while RSI has dropped below 70 and is curling downward. When you see this kind of alignment between volume, momentum, and failed breakouts, you start preparing for mean reversion. Before we dive in, don't forget to drop a like and subscribe if you appreciate this kind of detailed, no-nonsense analysis. Let's get into it. So let's talk levels. The first zone we're watching is that 59.20 area. That was support on the way up, now it's resistance. The initial rejection came right after tagging 66.64, and since then we've lost 59 and haven't been able to reclaim it. Beneath us, the next major level is 53.70, which is a gap support area and also aligns closely with the 61.8% fib retracement. Below that is the psychological magnet at 50, which completes the gap fill and represents a likely bounce zone if sellers push further. But the level I'm personally targeting as the high probability magnet is 46.49. That's the current 50-day moving average and also happens to sit right near a major pivot zone from April. That kind of confluence often acts like gravity. It pulls price in when momentum starts to break down. And below that, there's not a lot of support until 42.55. On the upside, if buyers somehow reclaim 59.20 and hold it on a daily close, we could see a quick retest of 62 or even 64. But as of now, that's a lower probability outcome unless momentum completely shifts. HIMS just printed a negative 5.8% red day on heavy volume. Over 49 million shares traded. And that came right after tagging the 100% Fibonacci extension from the prior move. It rejected hard from 66.64, which coincides with a fib target and an exhaustion point from February's prior high-volume reversal. We've now broken back below the short-term 8-day EMA and closed under the high-volume node near 59.20. That's our first red flag. The PMO, Price Momentum Oscillator, has just crossed down. The ROC, rate of change, is falling from an extreme 64%, which tells us that momentum is dying. This wasn't just a pullback, it was a shift in power. Here's the trade plan. I'm looking to re-enter puts on any failed bounce near 59.50 to 60.20. That zone aligns with the previous support flip, and if we get rejection candles or volume stalling in that range, it's a great low-risk entry for a short setup. The first target on the downside is 53.88, which is the 61.8% retracement level. From there, I'd scale out more at 50 even and hold the remainder for a final flush down toward 46.49. The invalidation on this trade is a clean daily close back above 61.50. If price reclaims that and starts building momentum again, we'll reassess. But for now, this chart looks like it's transitioning into a controlled unwind, and we want to be positioned ahead of that move, not after it. MACD is still elevated but looking heavy. RSI is curling down from overbought, and we're watching for confirmation under the 50% fib zone next. The chart doesn't lie, and right now, HIMS looks like it's starting a corrective phase. Whether you're swinging puts or stalking the dip for a long, this is a must-watch setup. So, that's the game plan. HIMS had an incredible run, but this type of move rarely holds without a real pullback. With momentum fading and volume shifting, I'm leaning short into any failed bounce. Whether you're planning to play this with puts or stalking a deeper dip for a long re-entry, this setup deserves your attention. Let me know in the comments. Are you buying the dip, riding the short, or just watching this one from the sidelines? And as always, thanks for watching. I'll see you in the next breakdown. I'll be updating this as the price develops. So if you want to stay ahead of the curve, make sure you're subscribed. Comment below. Are you buying the dip, shorting the rip, or just watching from the sidelines?